Good morning, traders. This is Frank Cholly with RJO Futures in Chicago, coming to you on Wednesday morning, November 7th, with your grain market morning commentary. Haven't been around in a while, I hope you noticed. But right now, we have corn down 3 or 4 cents, soybeans down 8 to 10 cents, wheat just a little bit higher, 2 to 3 cents higher. And I wouldn't be surprised if by the end of the day, grains are all, sharply lower based on what's going on in the outside markets. We have the election behind us now. It is November 7th. We have the treasuries up and we have the dollar up, the two safe havens. So we got liquidation across the board. I don't know if it has anything to do directly with the election results or if it's just another one of those risk-off days. We've been having a lot of that. And obviously, there's still some concern about the health of the overall global economy and this fiscal cliff that we're headed for. So it makes sense that we're getting a bit of a sell-off. We had a rally yesterday. We're giving it all back today. In the grain markets, we have a crop production report comes out on Friday, and I wouldn't expect some big changes there at all. Right now, beans are actually pricing in better yields. We're looking for something close to 38.6 bushels per acre. Corn, about 122.5, somewhere in there. So I think really the focus on this report is probably going to be on the soybeans. A bullish surprise would be if the USDA doesn't increase its projections on bean production. So we know that we got some rains late in August. It was enough to help that crop. We're getting a little more than what we thought. But listen, man, we're still very tight supplies. Demand hasn't gone away. At some point, prices are going to come up and the farmers are going to hold out until that time happens. So unless we have this meltdown in the outside markets, and then everything's going to go down. But if everything remains the same, I would expect that at some point grain prices start to work their way higher now. You look at a daily chart, we've been basically flat for the last month or two. Prices in soybeans may have to dip down and check that gap that we were talking about before back in July. So maybe soybean prices will go down and test $14.75. I kind of doubt it, but it's certainly possible. $15.75 on the other hand is a big hurdle to get over on the upside. We get a good pop above that, a close above that, and I think right away the technical buyers come back in and the price can move higher. Corn stuck in a big range too. All these markets, wheat, corn, and beans, look at the daily chart. It's really flat. So we have no direction, and that's a big part of the reason why I haven't been out here doing my commentaries every day. There's nothing really to report here. The markets are sideways. We're waiting for some news. So hopefully on Friday, we get a little bit of direction and prices could start to move higher. Wheat is being supported now. Winter wheat crop in the ground for the most part. We're very dry still. This drought's not over. It's far from over, and it's a big deficit that we're running on soil moisture. So we're focusing on that crop a little bit more because that's the one that's in the ground. As the prices between European wheat and North American wheat start to narrow, we'll see demand pick up. Let's see what happens on Friday. Keep an eye on those outside markets. So I'm really concerned, that might be where we get our direction. If the economy is that soft, then grain prices will come down regardless of the tight supply. So look, that's all I have time for now. We are going to do one of those roundtable discussions on Thursday for Friday's crop report, so please tune in for that. And as always, remember that trading commodity futures does involve substantial risk of loss and is not suitable for everyone. Thank you.